What's up, everybody? And thank you for tuning in for another Indy Investor Pod. We're just kind of busting through the neighborhoods here, talking about different parts of Indy, talking about the different neighborhoods, different pockets, different areas, kind of the good, the bad, the ugly, stories that we have about them, those types of things. So today we're digging into the Southside, just talking about what's going on, basically kind of south of the downtown down to 465. So we're going to talk about that today. I got Dave and Steve and Sterling back with me, and we're just gonna share some stories, share some, like I said, the good, bad, and the ugly of this one. So with that, let's get on with the show. All right, so back to another Indy Investor Pod. So Sterling Davis, Steve Lehman, Dave Short here joining me, talking about the south side of Indy, the different neighborhoods, the different pockets, where to invest here in Indy, kind of where to stay away from, what to think about, things you need to consider. And so last episode, we talked about the west side, kind of going from basically from the downtown, the river, over to the west side, over to 465. Now we're going to kind of take a look at that south side part. So since we just left the west side, I kind of consider this part kind of a west side, south side kind of thing. But let's talk about this Mars Hill area. I feel like this is a neighborhood. I don't know, maybe it's my biased opinion on this. I feel like a lot of these neighborhoods that we've talked about are ones that, like, hey, this is kind of an up and coming neighborhood or something you can look out for. I look at the Mars Hill, like kind of where it was like 2-3 years ago. Now I'm like, I don't see it. Like I'm dropping my prices there. Is that something that, are you guys seeing that same thing too? Or is that just kind of what you guys are kind of going along with as well?
Mars Hill hasn't changed in 40 years. I mean, it just doesn't seem to have any progress. And, but it's a really, really solid rental area because I think it's Wayne Township Schools, if I'm not mistaken.
Mm-hmm.
Yeah.
So it's about the only entry level now into Wayne Township Schools from a pricing standpoint, and where they can get their kids in the school system and still have a $600-700 a month rental. Sterling, I don't know, are rents stagnant there?
We saw an increase, I would say 3 years ago in that area when it came to rents, right? Like you started going from that 700 and I started seeing it go to 850. Kind of scared me though, because of how it was pacing and who I knew was in that marketplace. There's certain property managers that love pushing that edge because at the end of the day, they're probably going to sell it, or, their intentions is not to hold it for long term. And Mars Hill is a perfect example of that. Mars Hill, for me, is not one of my favorite places to invest just because of, everybody talks about the flood zone. That's a known fact. You got to have flood insurance. It's just the unknowns. And when you start looking at cash flow, I think it is a great place just because of, the school districts and things. But all in all, it's just not one of my favorite places to invest when it comes to rentals, even though it's a highly – why people like it. You can buy it for $50,000, $60,000, and it rents for $850. You know what I mean? Those numbers look great on paper. I just don't like the people inside of it. Not literally like the people, but like the tenant pool of those people don't really excite me.
I was gonna have you break out your list. Like, who don't you like? Come on, Sterling.
like John off Lyndhurst.
No, I agree with Sterling on that. Though, is the tenant pool over there is you're going to have a good turnover, and you're not going to have consistent people there for long periods of time, and it'll be due to either the street or the neighbors who have lived there forever and a day. They're be honest with you, the people there are very the people who have been there for a long period of time. They don't accept everybody, so to speak. So it's
rooted. It's rooted for sure.
Yeah,
you definitely don't want me coming in there. Is basically what he said.
Yeah. It is. It hasn't changed at all. At least for as long as I've been going in there, and we don't go in there. I don't think we've ever bought in there. It's just not. It's not our cup of tea, personally.
Yeah, I think a lot of out-of-state investors have overpaid in there.
Yes.
And will come to it will bite them just because, like you said, buy for 50 and rent for 850 seems like a no-brainer. Well, sometimes it isn't a no-brainer.
Well, some of those turnkey providers just screwed a lot of people too in that area, and it's just a lot of houses that are just not the value of what they should be at this point. So yeah, I agree 100%.
So I think there's availability there. You can pick some stuff up, but you got to be conservative on your prices. Where you guys are talking about, something like $50,000 for 850. I think that's just like, hey, you try to get as cheap as price as you can, and try to if you want to do that, and you have multiple rentals, you have a good team on the ground and stuff like that. Like I think you can be successful over there, but I think like you just need to be conservative with what you're buying and kind of know what you're getting into and stuff like that, and expect a turnover.
Let's move on. We all hate it over there.
I was trying to put a positive spin on it a little bit there. So let's go. Let's just kind of move over, kind of a little east of there, then just kind of come across the river. Let's talk about like kind of that North Perry area, kind of right around in there, or even over into University Heights, kind of right, kind of just north of 465, kind of what you guys are seeing from there and stuff like that. So I like these areas a lot for for buy and holds, especially to kind of picking up stuff there. I think when you get close to the the U of Indy, you can definitely start flipping over there as well. But I think it's a great buy and hold market down there is what I look at.
Yeah, I agree.
University Heights has really turned around, and because of if anybody didn't know, the University of Indianapolis has just put millions and millions of dollars. It's very similar to Marion College on their expansion and the money going into the school, and the real estate around there has just escalated tremendously. So we can't find flips over there. We'd love to. They're great flip properties over there.
Mm-hmm.
Yeah, we find that as a good rental area. Good solid buy and hold. We like it. It's definitely a good area.
Yeah, I agree. I mean, I think we see a lot of growth and development that's just kind of really pushed that area up. It's really cool to kind of see. If you say have rental rates increased there, absolutely. I mean, I had a house over there for years that was a $600 rental, and now that thing is at $750, $800, I think. So you definitely see the growth, and the university is only helping it. We work with one of Dave's friends who's a turnkey provider, and Chad and them. They're doing great over there, doing turnkey properties, and then we rent it out and lease it, and it's pretty easy.
So awesome. How about north of that then? Kind of north of University Heights, but then kind of south of the downtown areas. They have like Germania Creek, the South Village, Garfield Park. I got a pocket in there, kind of underneath that Bates Hendricks and stuff like that. So I like the Garfield Park area. It's not it's not Bates Hendricks, of course, and things like that, but kind of lower scale. I know this is kind of that pocket by pocket, street by street kind of area as well, but I see some cool stuff going on in the South Village as well. I know that's where Two Chicks and the Hammer are doing. They got a couple projects going on right there right now and stuff. But what do you guys, Steve? This is we're getting into kind of your home base here over there. So what are you guys thinking about? That kind of South Village, Garfield Park area.
In the old Southside. Yeah. Old Southside down there, Garfield Park. Bates Hendricks. It basically. Old Southside's kind of trying to catch on. There's been some good movement over there. It's not fast. It's a very slow pace. We own some properties over there. We're not doing any flips at the moment. We're letting other people do it right now to kind of bring up the value. The Old Southside location, just in general purposes, is probably better than Fountain Square and Bates Hendricks, just for the fact you're literally right down the street from the stadium. You just go right underneath 70 and you're pretty much downtown. So it's great over there. You get down to Garfield Park, south of Raymond. Garfield Park is a beautiful park. The neighborhoods are solid home ownership there. We go a little further south, you can get into some more rental stuff down there by Troy and stuff. That whole section down there to us is really great for both flipping and buying holds.
Yeah, I think Garfield Park it's probably what amazes me, that houses in Garfield Park don't bring what they bring in Bates Hendricks.
Right.
Garfield Park is so much. I mean, Garfield Park has probably had, Steve, what would you say, 30% appreciation in the last 2 years?
Probably, yeah.
On there. Stuff that I bought and sold for $130, $140 today. I know if I put it on the market, it's going to be $169.9.
Yeah.
Wow.
So I think I think what you have to do is, if you can find a flip over there and you can turn it around, it will bring the money over there. So, I mean, I like it so much better than a Bates Hendricks. We're doing a few things over there, but Garfield Park, and you can go east to Shelby Street there, and those areas are starting to pop back. and
Yep.
the point of entry is fairly low. I mean, you can get in there at $45,000, $50,000, $55,000 and find a pretty solid house that you can redo. And it's like, you know, if they can call 45th and Crittenden Broad Ripple, and, you know, hell, they can call this Garfield Park a lot easier as far as I'm concerned. So
I like that.
that's-
Dave, do you think that is just kind of the difference, you know, talking about that between Bates Hendricks is like the size of the houses? You know, I feel like they're kind of just a little bit smaller than the Garfield Park, so you're not dealing with as many issues, or what do you
know, the houses are they're newer, you know, they're World War II. Yeah. So you're not dealing with all the knob and tube. You know, the houses are built so much what I call square, and the floor plans are proven and predictable. And so you can bring all of these amenities into the house without having to move walls. And, you know, so you can make that one bath spectacular. You know, the basements are solid, that can be finished. And I don't think I've went into a Bates Hendricks house that the basement could be finished for extra square feet. Yeah. So
no, I find that interesting. You know, for our company, man, I really struggle on, like, we're almost the opposite of like FS Houses. FS Houses does a great job of being first in the neighborhood. For me, I'm one of those people that I'm just so risk averse at times that it just kind of scares me. And I would just, if I know that Garfield Park is what it was, I'm like, well, it's 700. Plan for it to be 700. You know, it's sometimes hard for me to figure out when that wave is about to happen. You know, like we have rentals over there on Troy Avenue. They're phenomenal. And people like call me and they're like, hey, I want to buy in Garfield Park, like, so I can, you know, catch that appreciation and do that stuff. I'm like, I'm not really that guy. Like, I'm the guy that if you want to just find solid rental and you know what it is, and everybody around you start developing, you're like, all right, I think I should put some money into my house, you know? And so I think it's really important to have perspective, to understand who you are and who you're working with. Because for us, if you come to us, and like, it's the same thing with Sobro in Bean Creek. Like, people are coming to us and they say, hey, we really want to be in these neighborhoods because we can do the burn, stuff like that. I'm like, I don't see it. I see rental comps here because I have, you know, 50 rentals in that same thing. So for me to be the first in, or the first one raising rents, I really struggle with that, you know? So I think it's a perspective of who you work with.
Good flippers, if you look around the really strong neighborhoods and you go out 3 or 4 blocks, you can almost always do well in those neighborhoods. For instance, around Garfield Park, if you go east of Shelby Street, you know, you can do really well because of point of entry. I had a friend of mine do one on Raymond Street a couple months ago. He closed it. He bought it at a sheriff's sale for like $40,000. I drove by and I said, have you lost your mind in buying this house? And he put about $40,000. So he's got 100 in it. And I said, what do you think you can sell this for? This is on Raymond, right by 65. He sold it in 2 weeks for $150. And it's like, I mean, it's just unbelievable. So it just shows that you can go to peripheral neighborhoods and bring it in at a price that they can't get in that neighborhood, but yet they can still walk to the same conveniences that they have there. So entry-level flippers, look at the great neighborhoods that the bigger flippers are doing and go 3 or 4 streets, 2 or 3 blocks, and you can get entry level and get really good pricing. And most of those guys, I can't find anything in Garfield Park. I said, hell, I can't find anything in Garfield Park. But go to Wade Street, go to Finley, go to some of them other streets over there, and you can get a nice flip that's going to bring $120 or $130, where that same house is $160 in Garfield Park.
I want to bring up kind of something that, you know, our purpose behind this podcast is, you know, with education and stuff like that, something that Sterling kind of brought up is like, hey, he might not be like the best person to talk about this or like go into a neighborhood and things like that. I just say when you're working with people, make sure you're talking to people and make sure they're open to working with somebody else. I know Sterling, if he's like, hey, that's not my thing, but hey, talk to Steve and talk to Ryan and Ashley about this. Like, we all if we're doing things the right way, if we're out for your best interest, things like that, we all talk to each other. We all know each other. We all know kind of what's going on with different projects, things like that. So make sure you're working with somebody that is open to working with other people in the community, and they're not trying to just hold you in their little pocket and stuff like that. So my little, I guess, my community.
Be able to call your competitors and say, okay, Gary, you beat me on this house. How'd you beat me on this house?
That's how you get better. So yeah. That's good. So let's talk about one of the hottest areas in Indy, then Bean Creek. Let's talk about Bean Creek. I know there's been a lot of buzz about Bean Creek lately and stuff like that, but like honestly, like I think it's a great buy and hold area. That's what I've kind of known it as. Is what I kind of see it as. And Steve, you can, like I said, I know you have a lot of people that work with you guys that are investing in Bean Creek right now. Like, so what do you see it? Is it like is it as good as what people are making it out to be, or is it going to be this next, like, it's just going to be these appreciation just out the roof and things like that, or is it really just that buy and hold neighborhood that is solid right now?
No, I think it's going to stabilize. Like Dave said, the 120, 130, 135 mark. I don't think you'll see much. You could probably see maybe 150, but I think they might be pushing it. It's a solid blue collar area, and people that are there for long periods of time. I knew a guy who was buying 2-bedroom, 1 bath over there for $20,000-$30,000, renting them out for $550, and he's got a bunch of them over there. I see a lot of people, clamoring about how, Bean Creek's on the rise. Well, there's nothing to incentivize Bean Creek. There's no businesses or anything that's going to like jump that area. It's just a solid working class area. It's great for rentals. It's great for cash flow. And, what you do got to be concerned about is the flood zone that's down by the creek, and you got to be concerned about it. If you're buying houses down there, there is a flood zone, and you better be cautious.
Yep. No, you're absolutely right, man. I'm sorry. I was having church here. You were preaching. Because like I think
I was just rambling.
No, you're hitting it on the head, man. I think so many times like people are looking for that next thing, and if you hear enough people say it, you're like, oh, they said, and they don't have any true indicators. Like those are the indicators that I look at. Like, what is the commerce? What is the commercial commerce that are going to drive? You talked about like on the first episode about what drew Fountain Square to grow, and one thing you said was it was the art. Like that builds culture. Like what is the culture for the neighborhood that's going to change over? Like for Riverside to build up, you can't just put like a amusement park or something like that. The culture, something has to change the culture of the neighborhood. And with Bean Creek, I think there's a lot of great things. It's a school that sits in the middle of the neighborhood. It allows people to walk to that school. But that school is a very impoverished school. Like, I mean, Christian, who's on my team, used to teach there 4 years ago. He'd tell you, like, a lot of the kids are lower class, poor people, But do we buy in that neighborhood? Absolutely. We bought one from Brian M. on Finley. Love it. Like the house that's two doors down sold for $105. That's the value. Now, if you think you're going to get, like if Mike thought he was going to get $130 for it, it's like, you're not going to get $130 for it. So I think that's the thing that I see with a lot of the people that are raving about it. I'm like, it can work. I think, the one we got from Brian and them was like 35,000. He's putting 20 to 30 into it. He's 60 all in. His after repair is probably 95. Like that's a great deal. So I don't know. I just don't want people I just got in a bidding war on one on State, and I was like, no, we're not going to buy it for 85,000. And it still has another 20 to go into it.
Yep. Yeah, I agree with you completely on that. It's I guess it's difficult to sometimes listen to everybody, clamor about it, but you got to be realistic. And this burst strategy stuff that everybody seems to like to do, this area, you got to be real careful because you may not be able to burr it out. The strategy just might not be there. You may think the numbers are because you got the 135 ARV, and everybody's like, "Well, blah blah blah." Well, that house was done at a full retail, not a rental grade. It was full retail grade. So for you to get that 135 value, you're going to have to do a high end, and it's not going to bring in the rent. I just don't think it will.
Yeah, no, I think that's the thing. What I see with like burr investors, and we can probably go on a whole nother episode about this, where it's like they do their numbers and they say, all right, I bought it for this, I put a repairs for this, and they kind of, and then they say the after repair has to be 150,000. If I get 150,000, that means for me to get my appraisal, I have to get $1,500 in rents. So instead, I like to do it the backwards way, right? It's like, all right, what is the rental comps for this area? Okay, the rental comps for this area says 800 to 1,000. Okay, what do I see as selling in that area? Okay, the most things selling in that area is about 100, 150, I mean 115. Got it. Okay, where do I need to go? And then I backtrack from there, where I feel like they're doing the opposite and they're trying to build up and say, all right, well, Sterling, we can't go on down on our rental price. It must be something wrong with your leasing process. But we can go further.
So it all comes back to it's Sterling salt in some way. That's what it comes back to.
Yeah.
You know, and two, just on being Craig on the flood thing, because the flood insurance is, you know, flood insurance is not like it used to be. It's not near as expensive as it used to be. You can go to certain places and get it. But if you have to go directly to FEMA to get your quote, then you're going to pay a lot of money for flood insurance in that area. So, and there's other areas, and they even rate the area, the amount of the flood insurance. So flood insurance is not a deal killer, but you better have a cost on going in, because if you mortgage it, you will have to have flood insurance.
Mm-hmm.
If you pay cash, you don't need flood insurance.
Yep.
A lot of investors say, well, I got to get flood insurance. I said, well, do you think it'll flood? What's in a floodplain? Well, I mean, there's certain areas in Indianapolis hadn't flooded in 50 years, and it's a 100-year floodplain. So, but if you pay cash for it, you don't have to have flood insurance. And investors think for some reason it's a, you know, federal law. If it's in a flood insurance, you have to have it, but you really don't if you don't have a mortgage.
Yeah, no, that's a really good point and stuff. So, and then kind of moving east from there, there's some really good pockets like around the golf course, Fair Shank around there. There's some pretty good properties you can pick up. We kind of east of that Bean Creek area, but then let's kind of talk over, kind of move into the Beach Grove area. So I think it's a good area. Obviously, a great buy and hold area. A lot of families around there, so you can rent it out to a family, things like that. So good rental market. Also, I think this is one that you can kind of pick up. If you find a pretty good deal on a property, you can pick it up and not go overly heavy on what you're kind of putting into it with rehab, but do some minor rehabs, and you can retail stuff down here pretty easily as well. So, Dave, do you guys handle many like kind of flips or that smaller flip stuff down in there?
We've got 3 going in Beach Grove right now. We really like the neighborhood because of the point of entry. The point of entry on all 3 houses were one of them was 70, one of them was 57, and one of them was 50. And we're going to be at retail from anywhere from 135 to 165 on the houses. And you know, we stepped up the retail a little bit on one of them because it had some features that you normally don't find in Beach Grove. So, but yeah, the retail market, and you know, Beach Grove used to be street by street, but it's pretty well cleaned itself up. It's pretty nice anywhere in Beach Grove. You can, you know, lock comms. I mean, I would prefer to be south of Main Street, but you know, when you get east of 17th Street, which is Sherman Drive, you know, all of the areas back over in there are pretty solid. So, I mean, if you can, you know, here's where I mean, I buy at 57 and rehab and flip, where if a buy and hold guy decides to go in at 57, you know, I put 35 in my house, put 15 in it. They can rent it all day for $1,000, $1,100 and going to get really good growth on that house in the next 5 years. Because as soon as some industry comes back to Beach Grove, they lost the hospital, but everything still stayed pretty solid over there. Good school system, manageable houses, you know, a lot of 700-800 square foot 2 bedrooms, but you know, it's an A- flip neighborhood.
Yeah. I like to, when I'm looking at some place to buy around there, I always just look at the landscaping. I would just drive past all the houses, look at the landscaping, like, okay, that's a lot of families living here. I want that house because that could be the Indy rental on this street. It's really easy to see in that area, I think. So,
yeah.
Yeah.
Yep.
Sterling, what are you guys thinking about? Like, what are you, so you're buy and hold investors, like, what are they usually picking up houses for right around this area? Then what can they kind of rent out? Is that you kind of right on point with what Dave's saying?
Yeah, absolutely. I love Beach Grove. I mean, it's more or less just being able to find the deals, like, in the Beach Grove area at this point, because I think everybody kind of is falling in love with it a little bit. Like, we got a duplex last year, picked it up for all in about 80, 85, 90. And it was able to rent out for like $750 per side, which is still pretty good because of those soft numbers. Like, your vacancy is going to be lower. You're going to be able to have a more stable tenant. So those are the things that like Beach Grove kind of gives you versus like some of these other areas, is that stability. So, you're willing to pay a little bit more. You're willing to pay, closer to that 1.25 rather than, a two or something like that, because of the stability that Beach Grove might give.
Steve, any insights from you on this area of Beach Grove and kind of what you're seeing down there?
No, they covered it. We're very comfortable with Beach Grove. We like it. I mean, it's always one of those places. If a house pops up down there, we're gonna go take a look at it, and if it works our numbers, we're buying. So it's a question.
Have your guys' buy prices gone up? From even the last year, kind of in that Beach Grove area? You guys looking at? I've seen a little bit of an increase for us, not too much. I still try to stay fairly conservative down there, but I feel like I'm maybe a little bit more risk adverse and like saying, hey, I'll take a chance on this one. Are you guys kind of in that same ballpark?
Oh yeah, absolutely.
They went up. I think that's probably one of the few areas in Indianapolis that done right that you maybe can buy off the MLS, because brokers tend to miss values a little bit there because they see the unrehabbed houses really roughed up at 60, 65, and you can pay that over there and do a flip.
Yep.
So you can actually, that's one of the few areas flippers can buy off the MLS if they're, on this ready to roll.
That's an excellent point, Dave. I mean, even on the buy and hold, like that area, I have an auto email that I kind of get each day just to kind of make sure I'm on top of that area, because I know what you said, like they don't know what a house that needs some work, what that means. Like for us, we're like, oh, clamoring, like give it to me. But for the retail market over there, they don't know what to do with it. So I'm always looking.
So awesome, good stuff, guys. As we wrap up this show or this episode, just about kind of the south side of Indy here, anybody have any last like tips or points or anything that they want to put out or anything that we missed on any of these neighborhoods, just kind of on the south side of Indy?
It's tough to miss on the south side if you do your due diligence. Very few houses or very few areas that you'll miss. I mean, I do not like the old south side, but if you do your due diligence, a good operator can do fine over there.
Mm-hmm.
Yeah, I agree.
I see a lot of potential. There's potential all over the south side. So, with the exception of Mars Hill. So
I'll let Steve go to Mars Hill for me. No, I mean, I think everybody said is absolutely true. I mean, I think you just have to make sure that you're with the right person, I would say. Like what we talked about, like, for myself, I'm not really that person that's going to be the first in and be able to see the increased values and things. But FS Houses does a great job to be able to see those values. And I think other people in our marketplace as well. For us, it's about steady, low risk, opportunities that are just going to be steady eddies. So just kind of keep that in mind as you're buying in these areas, who you're talking to. I've just had an investor get burned on Pleasant Run Parkway because the investor agent told him that he can get it for $140 and rent it for $1,400. And we're telling him that it's $850 and $950 is his rent. So, just make sure you know who you're talking about. Do your due diligence.
Wait, you mean you should talk to more than one person about buying a private property or you did your due diligence?
Oh, man, come on.
If you're wondering about any of that stuff, go back to our episode. I think it was 14. Where we talked the top 10 mistakes investors make. So awesome. Well, it's a wrap for this episode here, talking about the south side of Indy. So we got 2 more episodes left in this series. We're going to talk about the north of downtown, and then we also are going to talk about the outside of the loop. So 2 episodes left in this series, and appreciate you guys, your insights, everything you guys are doing. And we will see you guys on the next episode of the Indy Investor Pod. Later.
Sounds great. Good job.